Dow surging off the December lows and on pace to lock in a 9-week winning streak. It is the longest since 1995, and while investors may see this as a sign of more gains ahead, our next guest says the rally may not be as bullish as you think. Carter Worth is over at the Plasma to break it all down. Hey, Carter.
Hi, right. So, look, any instance of great weakness often is punctuated by a rally. Any instance of great strength is often punctuated by a setback, a dip, a correction, call it what you will. Meaning this is an unusually sort of symmetrical V, and the issue is, now that we've done that, is this a point at which it likely presses higher or some sort of give back? So let's just put this in a statistical context and see what we can see. So if you look at the next table, 8 weeks up in a row. We're now in the 9th week. We shall see what happens this week. But if you were to go and find all instances where the Dow is up 8 weeks in a row and gains more than 10%. I mean, because you could be up a little bit and you haven't gone anywhere. That's only happened 13 times going back to the 1920s. That's a probability of occurrence of 0.2%. And let's look at what's happened as a statistical thing thereafter in those 13 instances. What's happened thereafter is as follows. 1 week later, down a little bit. 2 weeks later, down a little bit. 3 weeks later, down a little more, 1.5%. Let's keep going. 1 month later, 2 months later, all sort of here. But the point is that you're likely to have a give back, and it's likely as ever right about now. We've seen 2 or 3 2% corrections, pullbacks, dips, sell-offs since the lows in December, and we're set up for that sort of thing now. In terms of really the most important thing is what to buy. I'm still very much in the safety camp, and I want to talk about utilities. Now, this is a near perfect uptrend. The entire bull market, which you can see here, from the 09 low, the actual, and watch if I put in some drawings here. What this is a literally perfect. It has bounced off this line repeatedly, like clockwork, over and over and over and over. And we have made a new high each time. And it's my bet that we're going to make a new high again before actually the S&P does, if at all. Now, let's talk about utilities as an investment. Here, going back to the prior bull market peak in 07, here, of course, utilities relative to the S&P. And one could say, well, see, that's the problem. Utilities don't keep up because they're low beta, they're a bond proxy. But here's the reality. If I make these both total return, this is just absolute. Now I'm going to switch it to total return, and what you have are the really good facts. That actually on a total return basis, utilities have paced the S&P with less volatility and less risk. And I think utilities are as good a place here and now as anything. You know where the 10-year yield is. It's not signaling good things.
Carter, why don't you come on over to the desk? Shelby will bring the chair in.
Thank you.
Thank you, Shelby.
I mean, it's Carter.
You hungry? Look. Are you hungry?
Hey, he's got a couple of gummies. Nice.
Got a snake and he got a couple gummies.
They put these on your pillow when you go to hotels. Usually it's a chocolate.
You're all set. You know, we were
Turn down.
chatting with
Yeah, the turn down gummy.
we were chatting with Bob Pisani yesterday, and he was just going off a list of all these reasons why this rally looks very strong. The breadth is good. The new highs are
true.
Great.
But the question is,
why does this override?
Can you keep going without some sort of dip, correction, pullback? And this is about where that happens. But I think the really telling thing is this. If you think about where we are now, today we return to, it's a Wednesday, yes? We return to the most critical Wednesday of the last 6 months. It was Wednesday, October 10th, and as you know, the Dow dropped that day, 832 points, the S&P 100 points. It was the worst one-day sell-off since 2011 for tech, and we've finally gotten back to that level, right? And the reality is that the scare on that day was that rates hit an all-time high for this cycle of 3.26%. And yet here we are, and rates are much lower, and yet the market is still struggling. Really, the market should be much higher if you believe in the Fed model or you do your CAPM or whatever you want to play around with. Why aren't stocks much? The truth is the damage that was done was substantial. And while the ricochet is impressive, it seems to me it's impulsive, impetuous, and a little too steep, a little too clever, a little too much of a good thing.
So you talk about an average return after, I think it was a month or
I did 1 week, 2 weeks.
Right, but when you're getting into like the 2.25 down 2.25 from where we are now, that's the average.
Right.
On the wider ends of those kind of returns.
There was 1 or 2 that were up of the 13, the rest were down. And so it's the odds of being up, which I didn't include there, were consistently around 30 to 35%. Odds of being up, right? So You know, I think you sell calls. I think there's an option show on Friday. You could do that. But, you know, the point is that it's hot. Everyone knows that. You've got a lot of money drawn in. A lot of people are quite bullish.
What does the chart of the 10-year yield look like?
Well, it's a disaster, right? I mean, I think bonds and utilities, I think TLT is a great buy. I think the gold, you guys are talking about gold. Gold's no joke. There's a lot of things going on that don't sort of confirm. And then there's this, and this is this is the tough part. Tech had that day, right, down almost 5%. Amazon, again, underperforming. Google, underperforming. They're just not working. Now, maybe they're going to come to life, but listen, it's got to happen pretty quickly.
But Carter, if you look at the triple Qs, so as a technician, when you see that the Qs, 8 of the last 11 sessions are basically at the 200-day, not breaking down, just kind of staying there.
Right.
Is that bullish or negative or neither?
Well, it's sort of a re-rating. So the question is, if you have the sell-off and then you have the recovery, are you sort of not back to where we were in October? It wasn't a particularly good situation in October, right? We had our worst October in a decade, and the recovery is really. It makes me think of this: when you're hoping, it's hopeless. Yeah, it feels all so.
Wow.
It feels
That's
so
that
like
guy.
everything's going to be
I think he was looking
fine.
at you.
Writing it. He wasn't looking at me.
When you're hoping, it's
Hopeless.
When you're hoping, it's hopeless.
And what about when you're
Expression.
hopeless then?
When you're hopeless, what do you
Yeah,
do?
then
Well,
get along.
there's hope.
maybe you sell calls.
He's so full of great, he's philosophy.
Deep thoughts with
Yeah.
Carter
He's a
Worth.
philosopher.
Carter, thank you.
Thanks, guys.
Carter
Fantastic.
Worth.
Couple things strike me. The XLU XLU went from 57 before December down to 52, and where's it now? 57. That's a pretty significant move for that index in a short period of time. I'm not certain what it says. I think, to Carter's point, it says that yields continue to go lower. And I'll mention this. There was a great I Love Lucy episode where...
Which one? I love Lucy.
The Friends of the Friendless.
I don't know that one.
I Love Lucy. Well
You
done.
don't remember the Friends of the Friendless? She has
no.
a big bass drum and she's walking in a...
No. I like the one when she's eating the chocolate off the
Look at that.
conveyor belt.
Yeah.
Yeah, that's yeah.
All right.
The burlap dress
That's
one.
like, you know.